Good afternoon, everybody. Welcome to the TraderMerlin Show for the final 3 sessions of 2022. As you probably read or heard from my Monday morning must-knows I do for Online Trading Academy, this is a week that generally take off. I see Believable Direction saying, great day, yeah? Well, if you were trading it, I guess it was. I don't trade the last week of the year just because liquidity is pretty much gone and you get very volatile moves. Now, granted, today you did have some pretty decent moves. I mean, it was pretty much down Periscope all day, ugly days, particularly for technology. So I guess we'll start there. And let me give you a little bit of update as far as what this week's going to look like for us anyway here as TraderMerlin. I'm just going to do a little bit of a market update today, touch on some of the major market pieces, go over some of the things that I found interesting today as well as market numbers. Then that's probably going to be the last technical show we'll do for the year. Tomorrow, I'm going to do a show which is basically me going through my trades for the year and doing something that I think most people don't do, and that is go back through their trades, find out what they did right, what they did wrong. So I have a bunch of notes, at least from my perspective, on how my trading went this year. Some of it actually was pretty surprising. In one account, I had the highest efficiency rating I've had in probably 15 years. So that was really good news. So, of course, you learn from that and hopefully make that better. We'll talk about that tomorrow. And then on Thursday's show, I will do a year in review because so much has happened this year. I mean, it's almost too much to digest. I'll try to summarize it into a little 30, 45-minute show about what happened this year, kind of what are the big takeaways and what it might mean for the markets going forward. And that, my friends, will probably be all we really talk about. So let's real quickly look at the data that came out today because this was partially the driver, but there's obviously a lot of big things happening with China, right? You get the zero COVID policy being lifted. A lot of people speculating that's going to create even more problems going forward for China. Funeral stocks are surging in China as well. So let's see what that might have looked like with the data. So here we go. Starting off with the data for the U.S. markets, one at the top that I normally don't talk about at all is the goods trade balance. Now, this is typically this represents the value between imported and exported goods here in the United States. And it's a really important number because obviously we are a major importer of goods and services. So if that number continues to increase, then that would assume that we are consuming. If you notice here, it went from negative 98 billion to negative 96. Now, if this is a negative number, that means that we are importing in the U.S. If it's a positive number, it means we're exporting. So this is pretty much always going to be a negative number because that's just what we do. We import stuff. But the shocking part, not shocking, but the surprising piece was, notice what the numbers came out as. It was expected to be, it was 98 billion negative. They expected 96 billion. So still huge importing coming into the United States. We came out at negative 83, which means that the importing has dropped significantly. Now, you can make of that what you want. In my mind, when I see that number that says the imports have dropped significantly to the tune of about, in this case, $15 billion month over month, it means that people or companies in the United States, whether you're Walmart buying a whole bunch of cheap garbage for your store, or you're an electronics or an auto manufacturer buying parts from China to build your products, the consumption is declining in the U.S. So here's a chart of what that looks like. This is the goods trade balance. And you can see going as far back as this chart will let me all the way to 2015, we have been consistently purchasing more and more and more and importing more. Now, we bottomed out down here in April of this year where we had a negative 128 billion month over month import. Now, right now, we were expecting, as you saw here, to have roughly 98 billion, came out at 83. Well, the trend has been, for the past 8 months or so, less importing, which is a sign of demand drawdowns, meaning the consumption is not as strong in the U.S. That's not great, especially when you're looking at an economy that needs to be growing. We need consumption. So I don't generally focus on this one, but I think it is an important one because it does reflect the feeling that a lot of people have that we're going into a recession. And that picture does support that when you look at we're not importing as much and maybe not selling as much here in the U.S. So that was your first piece of data that came out today. The second part I thought was actually somewhat positive. Not going to say rosy, but if you look here on the economic calendar right now, the S&P Case-Shiller Composite 20 Home Price Index, which basically measures the price of homes in 20 major metropolitan areas of the United States, That was previously 10.4%. They expected it to drop to 8%, and it has been dropping aggressively for the past few months. Well, we didn't come out at 8%. We came out at 8.6%, which is actually pretty positive. That's a sign that things aren't falling as quickly and maybe not as negative as many have anticipated. So here's the chart of that one. Your S&P Case-Shiller Composite 20 Home Price Index. You can see going back into the early part of the year in April and May, we were over 20% year-over-year growth, which is not normal. A lot of people in the real estate market would say that 8% year-over-year is a normal number. I feel like that might be a little bit high. I'd probably give somewhere right around 6 myself, personally, just what I've seen over the years. If we scroll back here even further, I don't think 8 would be the historical average. 8 would be where my cursor is, and I would definitely go lower, maybe somewhere right around the 6 or 5 mark. So we still have a ways to drop to get back to normal. The good news is we are declining at a rate that is slower than expectations, at least for this month. That's a pretty positive sign, although I think that this right here is going to hurt the housing market. It's a reflection of flippers getting burned. When I say flippers getting burned, that means you got people out there trying to buy a home so they can put $100,000 into it and sell it for $500,000 more than they paid. Those guys are getting absolutely smoked right now. Now, the other part of this is, we can look at the prices of homes, but it's also your ability to purchase a home. Back in play, part of the talk track that we had earlier this year was that 10-year, as we were approaching 4.4% on the 10-year bond. Right now, it's had a hell of a week and a half. I mean, we were at 3.4% about 2.5 weeks ago, and now we're at 3.85. So it's definitely surging up. Today was a big day. Today was a big day to the upside there for that 10-year, and there's speculation that will continue to rise. And of course, if that does continue to rise, that will put further pressure on those Case-Shiller Composite 20 Home Price Indexes, as more people will be unable to purchase a home, and therefore people have to start to drop the price of their homes to sell, and we start to see that vicious cycle. So that was pretty much it on the news front or economic announcement front. You had for all what I see is one piece of fairly bad news, one piece of fairly good news. Now, I'll give you an update on two things. Number one, I did the Santa Claus Rally portfolio or purchase, which was 5 call options on QQQ expiring. I bought the February call options just because I know I'm going to close it on January 2nd. That right now, because of today's move in the NASDAQ, down 16%. So we opened that on Friday. We've gone through the weekend. Here we are on Tuesday, already down 16% on that options position. Just giving you the update on that one. Again, I will hold that all the way through January 2nd when the Santa Claus Rally typically dies. All right, let's go and look at some of the other numbers for today. At least we're noteworthy. We'll start at the bottom, work our way up. NASDAQ getting just beaten up today. And it was predominantly Tesla. As you guys know, I also sold the 120 calls on Tesla, which I am now in the money in a big way. Tesla really just cratering. I'll bring up even the Tesla chart here for all of us to witness. We talked about it last week. What was Elon Musk's liquidation price, right? He's got so much Tesla shares that he's using as collateral for a lot of the loans he's gotten for Twitter and other companies or other ventures. Doesn't look very good right now. We broke that 112.50, which from a lot of what I've read was his liquidation price. Now, if we add on volume here, you'll notice we had significantly high volume today. There may have been some liquidation going on today. Now, to me, it's not quite climactic volume, so there's probably still more pain to the downside. As far as my purchase at 120, remember, I have the options, so I have not been exercised yet. Somebody purchased that option from me, and they have the right to sell me their shares at $120. Now, right now, I'm underwater by, in the after hours session, we're down another 1.65%. It's still sliding after hours. So I'm down a little over $12 per share right now, and I've got, how many do I have of those? I think I have 3 contracts there. So you're about $3,600 in the hole in this one on that Tesla. But I do have a little less than a month left for those to be exercised. So we'll see, and if it does close below 120, I'll sell the 120 calls or a call that I feel is appropriate at that time, because long haul, I think Tesla will be fine. It's just getting absolutely murdered right now. And as I mentioned, I do think we'll see some liquidation of Elon Musk's holdings. I didn't think that we would. I thought we'd actually just bottom out here right around 110, 112, and then start to move up, but I was wrong yet again. So Tesla was part of the big bringing down of the overall market. Merlin, on the monthly demand, what is your thought? Well, Let's go look at that monthly chart here on Tesla, get rid of that volume because it doesn't matter now. I mean, I don't really see anything. You could argue that the bottoming tail here on this candle that goes, this monthly candle that goes back to September of 2020, the low price there was 109.96, which, we pretty much hit today. In the after hours, you can see we're down below that. So I don't know. It does feel like it's going to drift a bit lower here. Do I think we get down to that $40 mark? No, I don't think so. I would look at the weekly because the monthly, you really don't get to see any strong demand zones. So I'll go back to our weekly here. We'll zip on over and see where we stand. Now there's a lower range right around that 90, call it 97 to about 90. So you got 90 to 97, and then the level I do think that has a real possibility is potentially getting back to that 64 level, but that's a long ways away from current price. And if you're considering how much Tesla's already sold off, I think at some point it's going to become a pretty good value play here, as I mentioned on the show last week. If you go from peak to trough, where we peaked out in November of last year to where we are right now at this moment, Tesla's down $305 per share, or 73%. Does Tesla suck and is now going to go bankrupt? Keep in mind, Tesla doesn't have any debt and they got $5 billion in cash. Ford can't say that. GM can't say that. Toyota can't say that. Honda cannot say that. So I think they're in a fairly decent position. They're just getting butchered right now. And of course, what's happening with China, they're slowing down their factories in China as well, limiting productions. They actually closed a factory for the week, which they didn't do last year. So there are some, eyebrow raising moves. Personally, I kind of hope that Elon Musk finds his CEO of Twitter real quick so we can get back to focusing on Tesla and get that back up to par. But Noam says, Santa will visit the market tomorrow. We'll see. Again, I just did it for fun. Of course, it's costing me some money on that Santa Claus play, but it is what it is. Not going to lose sleep over it. That brings me to a real quick question here that we'll get into more markets. But Tim says, with so many stocks at 52-week lows, how do you approach value investing? I don't particularly. That's why I like having Larry on, because I don't like to hold things for that long of a period of time. I believe there's too much, for me personally, there's too much opportunity cost, and I'd rather be more active in there and make, I guess, more trades in that period of time and not lock it up in one security. However, there will come a point when some of these companies that have been absolutely just slaughtered get back into play. And, one of those, I think, is Tesla. Another one is Amazon. Oops. I think Amazon's another one. This is a weekly chart, by the way, that is going to have some real opportunities here in the near future. I mean, it's down almost 50% just in the past couple of months. This is on weekly. So going back into August of 2022, you're down 40+% on that bad boy. I think that Amazon is going to hit this $82 mark and start to move up from there. As I mentioned, I will probably buy some leaps, some longer-term options on Amazon. I'm not a fan of Apple, so I wouldn't be playing Apple personally. And if we look at Apple's chart right now, yes, it's sitting at a demand zone. However, what has this thing been doing? It's making lower highs and the same lows. As for those of you guys know, one of my favorite technical patterns is called a descending triangle, which, that's not the perfect one. But if we go through the bodies here, you can see the pressure pushing down on this one. So I think that Apple may actually be that piece that continues to pull the market down. Remember, it's the number one weighting in the NASDAQ 100. It's pretty significant in the S&P as well. So if that continues to show some downside pressure and break that area of demand and pop to, let's say, 119, these markets are headed for more downside movement. So a lot of conflicting signals. You have some economic data getting better, but the prices, the unwinding of these positions in technology is really what's fueling this market down. Now, speaking of technology, let's look at Cathie Wood's fund, ARK, and maybe bring Colin Teddards back on the program, where we did this vertical blue line. That was a show where Colin Teddards of the Investor Channel was like, it's a sinking ship. This thing is going under. And bless you, Colin, because when you did that, we were like $106, and here we are trading at $29.78. I believe it's the lowest since 2017. So this is a pretty ugly chart here for Cathie Wood. Do you abandon Cathie Wood altogether and say, well, she's done, she doesn't know anything about technology, or do you look at this and say at some point, that's going to start to come back into play, be more of a value play? I don't know. So Tim, to answer your question, with so many near 52-week lows, I don't particularly play value investing. I'm not one who likes to look at fundamentals and say, this is a great, solid company with amazing leadership. That's a Larry Jacobson, maybe a Bashir Chaya type of investor. That's just not me. But what I do is I will look at a company like a Tesla or an Amazon and say, okay, what do I think about this company? What do I see as its longevity, where it's at for the long haul? And then I might make a play on those ones. So Tesla and Amazon are two that I'd be looking to add, and there may be some more others out there. Tom, I don't know that one. BF. I know you're going to get me to bring up some. I don't know what that one is. I'll have to. Yeah, no, that fund is gone. I know it's gone. It's just getting slaughtered. You know, she keeps doubling down on her losers. So all the gains she made during that 2020 surge are now officially gone. Flay, Merlin, will you explain to me why TLT moves so drastically at midnight? Who is making those trades? TLT doesn't move drastically at midnight. TLT doesn't trade in the after-hour session. So you don't get, when you look here on a daily time frame and you go extended hours trading, right? It does not trade at midnight. Maybe it's a different time zone for you, but it does not trade at midnight, right? So the extended hours trading, you can see here, this is 6:30 California time. That's when the market's open. If you look where it opens, it's usually, 2 hours or 2.5 hours before the market's open. So the earliest that this could open East Coast time would be 6:30 in the morning East Coast time, and it goes for about an hour and a half after hours. So it does not trade at midnight. So I'm not sure where you're looking at that data, but why does it move so much? If you're talking about these types of moves here, it's because it's incredibly thinly traded. Nobody's trading it, so somebody goes in there with a small order, and it can move. Hourly makes no difference, Flay. This is a 5-minute chart. So if you look at an hourly chart, it does not trade at midnight. It can't trade at midnight. The equity markets are closed, and TLT is a product that trades on the equity market indexes, or it's an equity market product, so it does not trade at midnight. Let's see. Another group, somebody reminded me that I called like $50. Well, Tom, you may get your $50 Tesla. You may get your 50. Here's the question, Tom. If you called a $50 Tesla, so I'm all for, in hindsight, when people say, hey, look at this trade I made, or look at this call I made. If you're that type of person, then you're just a Sam Seiden, right? Because Sam Seiden will say, oh, look at this. I made this call. I made this call. I made this call. Did you buy puts on Tesla when it was, up in $150, $200 range, and you said, I think it's going to 50. If you bought puts there, or you shorted Tesla, I give you props. If not, it's just a call, right? Everybody can make a call on something. Oh, I believe this will happen. I believe that will happen. And that's the beauty of trading. We got to go and put our money where our mouth is. Hopefully you did, Tom. I know you probably did. If you thought Tesla was going to 50, man, and you trade that right, you did damn well. Let me see. Noam, I think you're in the housing market, right? You're a realtor, or you're in the real estate market. He says mortgage sales down 35% in November. Yep. And again, you could really easily just look at that 10-year bond and know that that's going to be the case, right? It's not going to be any surprise when you have rates jump so significantly that, mortgages are going to be an issue. Especially just this move up right here. It doesn't seem like a lot, but since it's only just a few weeks, that's a 13% increase in the 10-year. That means that the cost of borrowing money for the longer term jumped 13%, and that could impact bond market significantly, the housing market significantly. So, let's see. You made $200,000 today. All right, so don't take this as Merlin's an asshole. Take it as tough love. Good for you. Congratulations. However, I don't care. I really don't care you made $200,000. How much do you make over the course of the year is the important part. And the reason I say this is I traded next to a guy on the floor who he was on ABC World News Tonight, made $65,000 live on ABC World News Tonight, and the whole world thought this guy was the greatest trader in the world because he's like, oh, I made $65,000. Well, he proceeded to lose $20,000 the next day, and $40,000 the next day, and by the end of the week, he was down $30,000, and this guy was a net loser. But the one day he boasted about his great trades, he was on TV and everyone thought he was a genius. So congrats. I'm happy for you. I don't particularly believe it, but good for you. Let's see how it works over the course of the year. To make 200 grand in one day, you're taking some big swings, my friend. I've been bearish on Tesla for 4 years, but it defied gravity. And that's the tough part, right, Tom? You know that as well as I do, that you can have a belief that something's going to go in a specific direction, but if it keeps going the opposite, you don't pull the trigger, right? You're standing on the sidelines going, oh man, I'm bearish, but it just keeps on going and going and going. And that, picking the top on Tesla would have been a fool's errand. It would have been dangerous as hell. All right, so that was our. Oh, good. I was planning on doing a shorter show today anyway, so perfect. I got to do shorter shows, guys. I got too many other things going on in my world to keep doing these every day, unless this started to maybe become a revenue generating product, but it won't. So we're good there. All right, we didn't even get to the rest of the markets. So we start at the bottom of the NASDAQ. Crypto, who cares? You got the Sam Bankman-Fried stuff we could talk about, which isn't anything really that exciting. I did see the comment early on. I'm feeling better, believable, but my cough is just lingering. It's just doesn't want to leave me. I got this subtle cough that's just driving me absolutely crazy. There was a comment in the chat from Lisa early on saying, always fascinating day. U.S. probes how $372 million vanished in a hack after FTX's bankruptcy. Sometimes I wish I knew how to code. Yeah, learn to code. That's really, it's amazing what they did there and how that all happened. I don't know. I don't know what the deal was with that. There's so much speculation. When I lose a $20 bill, I'm tearing through every pocket and pants in my house to find that damn $20 bill. But apparently you can lose $370 million. You're like, it's fine. It's somewhere. It'll turn up. Yeah. Blows my mind. Anyway, the good news is you will have this horrible saga drawn out and ultimately come to some resolution going forward. Yeah. JB, I totally get it. I'm over Sam Bankman-Fried. I'm over it too, but I love it. I love the soap opera. It's Martin Shkreli. You guys may know Martin Shkreli. He's that other scumbag. He deserves a permanent donkey of the day. This is a real true life scumbag. Is Martin Shkreli? Remember, Martin Shkreli is the guy that took that AIDS medication that was I think $13 a pill that was really beneficial and significantly helping people in their lives. He bought the company and said, well, yep, $13 a pill. I'm making $500 or $700 a pill. Screw these people. And I thought, you're a bad human being. You are a horrible human. Anyway, he's now giving Sam Bankman-Fried advice. He's saying, hey, you should learn to shave your head. You should shave your head. You should listen to rap music and deepen your voice because you sound too effeminate and you're going to have problems in jail. And I'm just like, oh, this is great. You got one dirtbag giving another dirtbag advice on how to live in prison. This ought to be fun. Rivers and Mr. Wonderful. I think that guy might need to have something happen to him. Lori's like, ooh, man. When the markets change direction. Hey, congrats, Lori. I have to say, that's a monstrous hole to dig out of. And, we can maybe talk about that tomorrow when I talk about my analysis and my performance this year, which in some accounts I'm actually very pleased. Obviously, the crypto portfolio, that I'm not even really counting that. Or that's just a horrible performer this year. And there was another account which I was not so pleased with my performance. It was subpar for me personally, and it was a little bit frustrating. But some other ones were extremely good. And to have $100,000 loss or be in the hole 100 grand and claw your way out and psychologically fix yourself so you can get back to what you do, that's commendable, Lori. So congratulations. That is an incredibly difficult thing to do, to recoup from a loss that's that significant and get back on track. The good news is, and I'm hoping this is the case, is you have looked at that, what caused that loss, and you've analyzed it and said, okay, I'm not going to let this happen to me again, or this happen to me, or this happen to me. And as part of your rules, right? It goes in. Those are the things that make up our trading laws here. And I think it's important that you make note of that so that you don't go through another 100,000. And just think of where you would be if you didn't have the 100,000 drawdown. If it was maybe kept at 10, all of a sudden it would be a much, much better year. Oh, yeah. Now I know how to trade in a bear market. It's funny. This was years ago. I was doing a presentation for Online Trading Academy, and somebody was like, I'm only going long. There's no need. I don't even know what shorting is. And I said, let me ask you a question, sir. Let's say you're on Craigslist and you're looking for a new car. And you find a car, and it's the car you want. It's a 1968 Camaro SS. It is gorgeous, cherry mint condition. And you know that car goes for like 40 to 50 grand. But this one's in there for $30,000. And you're like, I'm buying it. The small print says it doesn't have a reverse. Try driving a vehicle in life if it doesn't have a reverse. And I know it's a weird analogy. I think that anybody here should view shorting as it's nothing out of the ordinary. Just, oh, markets are going down? Great, let's go down. And then keep it as simple as that. And it's just surprising to me how many people don't short or bet that things are going to go down. It's just the nature of the beast. Anyway, Mr. Wonderful is the guy from Shark Tank. I forgot his name, but he's this balded. Somebody else knows his name, but what is his name? Totally drawing a blank. He got paid $15 million to be a spokesman for FTX, and he is, I don't know, he's just arrogant, full of himself. He's supposedly a successful businessman and da-da-da-da. But yeah, I cannot remember the name of him to save my life right now. Merlin, do you think Biden's policies turned the markets or kept the markets bearish? I don't think it's Biden's policies. You've got Biden, but you also have senators and congressmen that are making decisions as well. So I don't like pointing the finger at any particular president. It's not a political statement. Oh, Biden's good or bad, or Trump's good or bad. There we go, Kevin O'Leary. I don't know why I could not think of that name. Kevin O'Leary is quote unquote Mr. Wonderful. I think he's Mr. A-hole. I think he's a total jerk, but whatever. He's the one who's rich. I think. I think there's been certain things that have helped the markets. I think there's been certain things that have hindered the market. But bottom line is, I don't particularly care as a trader, right? I'm just there to ride whatever direction those markets give me. So, made $200,000 event. There you go. I don't even know the value, but I'm pretty. What is 200,000 Venezuelan bolivars? Like $6, $15? Okay, let me run up the list here. I don't want this show to keep on going on too long. Anyway, indexes were down, all of them. NASDAQ, here's your Russell, down 0.67. Of course, this is in the after-hour session. You had your S&P down 0.38%. Again, the reason that the NASDAQ was down so much is it's the tech plays, right? The tech ones are getting slaughtered. We mentioned Tesla, obviously down 11.4%, and now another 1% in the after-hour session. But if you look at Apple, oops, not American Airlines. Here's Apple. Apple is down 1.39% today, which is exactly what the Nasdaq was down. You had Amazon, which was down 2.59%. Google, Google down 2%. So that's the primary reason why the Nasdaq was getting hurt more than others, and we'll see if that actually ends up saving it in the next couple of days as value buyers come in here and start gobbling some of those up. As far as overall markets, crude oil was up for the day, but it's had an about face here in the last couple hours. It was looking real nice. It was up over 1%. Hit 81.20 for crude oil futures. Sold all the way off to about 89.20, and now here we are at 89.53. So just call it unchanged on the day. And then gold and silver both looking good today. Let's get my daily back here. Silver and gold, particularly gold, has just been gobbling up whatever supply is at this overall level. So it looks pretty good from a bullish perspective for anybody who's long gold. The only gold I have is physical. I don't have any GLD or options on gold anymore. But let's just look at SLV real quick. There's SLV, some of the options I sold there. SLV looking, I would argue, even better than gold because it seems like it's consistently making higher highs, even though it's ever so slight. Higher highs, higher highs, higher highs. Let's see. What else did I have? Dave, you asked about how does this affect GDP? And I think you're referencing the durable goods orders. Oh, sorry, it wasn't durable goods orders. When you were looking at economic data out there, you were talking about goods trade balance. I think that it negatively impacts GDP, right? Because if we're not importing the pieces to make these products that the U.S. sells, then that's a sign of slowing GDP. Gross domestic product will start to slow down. So it would be a bad sign. If we see this chart here of, let me bring it up for you. Here's the goods trade balance chart. If we see this number continue to get better, and when I say better, meaning it's going towards zero up here, that's a sign that we're importing less and most likely demand in the U.S. is going to slow down. And those electronic components or whatever it is that we're importing could potentially reflect lower GDP going forward. There you go. It's not the best picture, that's for sure. Cash the king in 2023. I don't know if I agree with that. If we look at what's going on in the cash markets, and you can talk about that dollar index right now. And again, it depends on which cash you're talking about who. If we look at the dollar, dollar was the king, and now all of a sudden it started to falter, and it doesn't look like it's getting any pops or demand underneath it, right? It's just kind of slowly drifting lower and lower and lower. So I'm not a big fan of the dollar right now. It just looks like it's falling against almost every other currency pair out there. Here's the euro versus the dollar. So the euro is getting much stronger, meaning the dollar is falling. You have the British pound has been surging against the dollar. Heck, even the ruble. Well, the ruble has been actually drifting down. But most of the other currencies out there against the U.S. dollar have been performing very well for the past 2 months. So while it may be long-term, the king, right now it's definitely faltering, and who knows if that's going to have any more dramatic impact on the markets. The strange part for me is watching this dollar index really since September, how much it's fallen, and if I bring up the SPX here, the markets haven't followed suit. Typically, when you have the dollar drop like that, it means markets rally, which has been one of the reasons I've kind of felt like we'd have a bit of a rally, right? We've seen this dollar keep dropping and dropping. Well, that dollar keeps dropping. You would think that might actually be good for the markets, but in this case, it has not happened. We are sitting near a demand zone, but it's really nothing extraordinary. Your next major stops for the dollar are going to be 102.40 and right around 101.30. So there's your next two stops. CDs are the king. Oh, no, CDs are not the king. I mean, if you're lazy and you don't want to do anything and you want to earn 2%, sure. Then get yourself a CD. Do you think manufacturing microchips locally would increase exports? Sure. No, I don't think it would necessarily increase exports. I don't think it would have that dramatic of an impact on exports, actually. Look, let's just say hypothetically, I make TVs, right? I make Merlin TVs, and I need specific components from China or Japan or Taiwan, whatever, and I import those, and I make my product, and I sell it. If I'm exporting my TVs internationally, the people buying my TV don't care where those chips come from. Now, why do we get most of this electronic stuff from China? Because we can manufacture a lot of this stuff in the United States, but it's so much more expensive. So if I manufacture it in the States, keeping up with traditional business models that we have here in the U.S. and cost of living and all it pays, my TV is going to be far more expensive. Now, if I can get the chips manufactured, let's say I was buying from Taiwan. If I can get those chips manufactured here in the United States for the same price or less, well, why? I would have already done that, correct? I would already have brought that back home because now I can say made in America, and I would get that patriotism purchase. So I don't think if they make the chips here in the U.S., it would increase imports at all or exports at all. I don't think it would really have much of an impact in any way, shape, or form. It's about the cost of goods. If you look at the tax credits that the government is giving electric vehicles, I believe the numbers are if 40% of the battery components are manufactured in the U.S., you get like $3,500 credit. If over 50% are, you get $7,500 credit. Well, what they're just trying to say is the U.S. does not have a battery market, so let's encourage it to be in the U.S. So it's really all about the cost of doing services, cost of building your product and service. Futures in and out. They're opening up a new chip factory here in Phoenix. Good. Honestly, I wish they would. I wish we would have chip manufacturers here in the U.S. And, you look at some of the things that China did over the weekend, flying, 71 warplanes and a bunch of warships by Taiwan. Look, Taiwan has tremendous value. The largest semiconductor makers in the world. I mean, they've got it down to a science out there. But if we can get it to the point where, who knows, Elon Musk starts some, chip-making company in Wyoming in the middle of nowhere, and all of a sudden we get new business, new economy. And the key is it has to be a cheaper cost. Most businesses aren't going to look at, it's a way better product. It's really, am I making more money on the product that I'm selling to the consumer? Look at how much fast food has gone up. The cook gets paid more, so the hamburger costs more. And that's the thing that blows my mind. I am a fast food person. I know, hate me if you want, but I'm not too much of a fast food, but I do like the convenience, and if it's a good place, I like to have it. Every now and again, when I'm a glutton for a gooey hot mess burger, I'll go to In-N-Out. But the cost of those are up significantly. I think I told you Raising Cane's, which is a fried chicken place, which is not bad. It used to be $8 for a 3-finger combo in 2020. This was in February of 2020. Now it's $12.90 is what I paid over the weekend. And Habit's gone up much more. And you are seeing things now change, though. Blue Diesel talks about, the cooks are getting paid more. That's for sure. But what you're going to get here very shortly is full automation of delivery process. So your fast food restaurants, it's literally going to be, I like a Whopper with cheese minus pickle. That gets put into a computer, you verify it on the screen, and it's going to be a conveyor belt of non-human entities. There'll be one person that works at that place in case the computers mess up. So that's pretty much it. I don't see. I see the need to eliminate those employees getting higher and higher for these companies. You can use the term QSR instead of fast food, quick service restaurant. There you go. I like that, quick service restaurant. Well, in some of them, you get this reputation that a fast food is. It's all trash. It's not. I think that the QSR, what you're saying, quick service restaurant, you can get some decent food. It's not like it's all just trash, but I know. I do like fast food. How come the Dow was up? Because the Dow does not have as many of the tech components, right? It's a bit more diversified. You look at the NASDAQ. NASDAQ is predominantly going to be tech heavy. If you look at the Dow, you only have 30 components. And it's going to be price weighted. So we've done this before. Let me real quickly bring up Dow weightings. There's a cool site, you guys, I don't know if you've ever used it. It's called CliK Charts. But let's look at the top influential components of the Dow Jones, right? United Health Group, not technology. Goldman Sachs, and this is an order of weighting in the portfolio. Goldman Sachs, not a technology group. Home Depot, McDonald's, Amgen, Caterpillar. The first one we get is number 7 on the list, which is Microsoft, and then Honeywell. So these are not, your .com companies. The next tech company we have in here is, Apple at number 18. So in the top 20, I have 2 major tech companies. Let's see if we can go out here and go to NASDAQ 100 companies. I think weight analysis. Nope, not what I wanted. All right, if I look at NASDAQ, Microsoft, Apple, Amazon, Alphabet, NVIDIA, the top 6 are all just straight tech. So that's why. The Dow is not being brought down by the technology side of things, Alex. 50 points in the Dow is like saying that, yeah. Yes, and that's the main reason why, Alexander. Remember, we've talked about this last year. We said that when we had this huge move up in the NASDAQ, basically the stocks I just read to you are the pieces that are moving the entire market to the upside, or were moving. Apple, Microsoft, Amazon, Google, NVIDIA, those are the ones we're bringing the whole market up. And we said, while they're bringing the whole market up, they will be the ones that crash and bring this market down. And we'll see. I think that it has been the case this year, specifically right now. Tesla is the one bringing it down. I would say it's an untimely addition to the S&P 500 to add in Tesla. You can look at right here. Let's go Tesla's chart. And then I got to wrap up. So if I remember correctly, that was the split. So I think it was here. I think it was right here in January of 2021. I believe that's when Tesla was added to the S&P 500. January of 2021. So if I go and do SPX and go to January 2021, okay, well, it still looked good. It'll be higher or lower than that now. January of 2020. So we're still up a little bit, but that's certainly a big piece that's been bringing it down. It's called, what was that site? The site is called, I'll just copy it in here and you can see the base here. It's called CliK Charts. It's really cool, especially for any of you who are interested in the weightings and what percentage. When I look at the composition and what percentage weight it has, it's pretty crazy. I mean, right now the heaviest, and this is a change, guys. The heaviest weighting in the NASDAQ has changed. It used to be Apple. It was Apple for the longest time. Now it is Microsoft. Number one, 12.48% of the weighting of the entire NASDAQ is one company, Microsoft. The top 2 You're talking 24% of the entire NASDAQ 100 is just Apple and Microsoft. Crazy. Advut says, please take the comment. Well, I don't know what comment you're talking about, Advut. Not sure which comment you want. I found from a major in the Air Force that we count the Starlink for fast real time. Yeah. And I'm telling you, Elon Musk is a brilliant man. He knows that. He knows it. At some point, we may see a lot of more communications done with Starlink. All right, let me real quickly show you the earnings calendar, economic calendar for tomorrow. Chris says, pundits are all looking at pre-COVID highs for market to target now. It would make sense. I think that the markets have been absolutely manipulated because of all this spending. But let me see here. Oh, yeah. Okay, exciting day tomorrow. Brace yourselves, everybody. You don't need to get a pen and write it down. You really only have one piece of news coming out tomorrow. That's pending home sales. If it does happen with what they're expecting, it's actually relatively positive news. It looks like the previous month was a decline of 4.6% in the number of pending home sales. They're expecting it to be a negative 0.9%, which is good. You're not seeing the slide as abrupt as you were before. So that will be pretty much our news for tomorrow. There's really no earnings to talk about. So on tomorrow's show, I will be running through what are some of the big takeaways for me for this year from my trading. And again, I'm going to talk about the importance of going back and analyzing what you've done and hopefully get better from it. I'm not a business owner, although I do run my own business as a trader. So technically I am a business owner. But if I ran like a clothing company or a tech firm, I would go back through and see what did we do right for the year. I'd meet with all my department heads, all my execs, and say, what do we do right? What can we make better? Let's find the low-lying fruit and find out the changes that I can make that will maybe turn us from a 30% year-over-year growth to 35 or 40%, right? How can I increase these things and make our business better? And that generally is done with your team. As you guys know, as a trader, you are your team. You're the only person making those decisions for you, unless you're a fool and watching Jim Cramer. So I spent a bunch of time this weekend going through, and I got a bunch of accounts. I have 8 active trading accounts, so it's kind of, a lot of work to go through. But there was one account in particular that really just, I guess, shocked me. I didn't realize I was having that great of consistency with regards to that account. So we'll talk about that tomorrow and some of my big takeaways, and hopefully will inspire you guys over the last few days of this year to go back and reflect on your trading and figure out what you did right, what you did wrong. Don't just shrug it off as, I made money this year. Well, how are you going to get better, right? How are you going to get better or fix any mistakes that may have dragged you down over the course of that year? So that will be the focus for tomorrow. QSR is actually business, huh? I thought Yum Brands owned KFC and Pizza Hut. I thought that was Yum Brands. Very few houses on the market in my area. How does one gauge home sales if inventory isn't there? Good question. There's nothing for sale where I live, like literally nothing. Whereas if you go 3 months ago, there was stuff everywhere. And it's a real good question. I don't know the answer to that one, Lisa. I know that it's been challenging because of the rate increases. You have this pressure to prevent people from buying homes as rates have been increasing, but you also have prices of homes have been dropping. So why would someone want to sell? Like, I thought about selling my place, but I'm not going to sell it now. I could have gotten $300,000 or $400,000 more just a couple months ago. I'll wait. I'll hold it out. And I think that's more of what's happening out there. So it's a combination. You have people who just are not selling, so you have not much inventory. But you also have people who can't afford the prices of inventory that is out there. So people just pull their property because they're just not selling. I think that's part of it. Hell, no, I hate to say it. There might be more. I think the housing market's due for a steeper correction here until we get out of this funk that we're in. All right, everybody, that's going to do it for me for today. Hope you enjoyed it. It's a light trading week again. Not a lot to do. Our volume is going to be very low. We saw low volume on the Qs, S&P, and other markets out there today. So, again, I would recommend just do analysis on your trading. Relax. Don't make any trades this week. Call it a day unless you're a glutton for punishment and crazy volatility. That said, I will see you guys tomorrow where I do kind of a year-end review of my own personal trading, and maybe we can learn some things along the way in that. So thank you guys so much. Have a fantastic remainder of your day. If you like this show, obviously comment down below or subscribe or share it or whatever you want to do to help out this channel. Take care, everybody. I'll talk to you tomorrow.
Bye.